Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is May 18th edition of Market Outlook. So, quite interesting action in the markets across the board. We're going to get into it. Commodities, gold and silver certainly look interesting. Potentially, they have completed long-term down patterns and are on the way up, as well as some interesting patterns in the US indices as well. So let's get into it right away. And remember, don't forget to sign up for this free video and text version of Market Outlook and get it free every week. All right, first thing is let's take a look at the weekly charts. And as you can see, we have tremendous compression. And even though we closed on all-time new highs in the spiders, it was not all that powerful. Couple things to note on a weekly, this is weekly charts. Number one is volume has been relatively minor. The other thing to take note is that the ADX is the lowest it's been in over 6 years. That's the average directional indicator. So when we've been talking about this um, really tight compression, this sort of confirms it, and it is at its lowest level. So the average directional movement indicator is a good indication of momentum of the markets and the strength of the trend, and this is clearly sideways action. And you can see just the level of compression that we've had over the last 6 months here. Very, very tight, and in fact, the mathematics are proving that it's the lowest it's been in quite some time. So, with that said, you can see we closed basically on new highs, marginally so, but still on new highs on relatively light volume, um, and basically at the top of the channel. Now, the trend obviously intact because it's closed on all-time new highs. But let's take a look at some of the market internals and see what's going on there. Well, first of all, the VIX, which is a good sentiment indicator, is about as rich as it gets. It does get a little bit richer. And just going back over the last 6 months, the absolute levels of frothiness have been reached one, two, three, four, five, six, seven, about 10, 10 to 15 times over the last 6 months. Virtually each one of those have resulted in either sideways action to significant sell-offs from these high levels. Now, it doesn't mean that it can't go another half or another 1% higher from here, but that would be unusual. This action right here is indicating that there's a lot of frothiness. Risk sentiment here is very bullish, and again, the market has at best nominal upwards to sideways action, but more likely gets resolved with a 1 to 2% or more down move from these levels. So it'll be interesting to see if this breaks the pattern, but certainly on a sentiment level, looking at 3 month to 1 month volatility, we are clearly overbought. Now, let's take a look at some other absolute levels and ways to look at this. The VXX also closed right on the lower Bollinger Band. That's enough to also tell us that on an absolute volatility basis, the VIX is reached extreme frothiness here. And so that also is a bit negative for the market as well, or at least muted upward action at best. Okay, let's take a look at the calendar range here in IWM as well. You can see here the 6 month calendar range. IWM tried to penetrate it about a week and a half ago. Kun held here, and it's also trading above the May calendar range as well. However, more importantly, the trend line from the lows in October was broken, and you have not been able to get above the trend line or take out new highs. So if this IWM breaks down again under 120, that would definitely be another cautionary note. But this lagging action of what should have been the strongest market index in the US is lagging, is also a sign of caution. Let's take a look at QQQs as well on the same basis. And you can see Qs are quite a bit stronger, although again haven't been able to take out the highs of the year. So there's definitely a divergence, although overall you can say that the Nasdaq is doing quite well. Let's take a look at the trend line, similar to what we had looked at in the IWMs, and you can see basically we made that new high here, able to put in that trend line. You attacked it, could not close under it, still intact. So Qs, SPYs, definitely overall stronger, but sentiment a bit frothy across the board. Um, let's take a look at bonds. TLTs, we had highlighted this last week, uh, and basically we got down to some pretty critical support levels uh, on the weekly and charts. So what we can say is on a daily basis, that time frame, we're definitely oversold, but um, have changed trend on a daily basis. However, the long-term trend in bonds is still intact. In fact, we just touched down on the 65-week moving average, which came in around the lows of the week, which was around 118 or 119 or so. Let's get back and take a look exactly what those lows were on the TLTs, and this should be pretty good. So yeah, just above 118.95 or so, 119. Good support, which coincided again with that weekly chart. So as I was mentioning last week, we were quite oversold and found support on the long-term 65-week moving average, which is intact. So potential sell-offs this week, right around that 119 to 118 level, could be looked as a longer-term buy opportunity. And on the other hand, if one is a bit more negative, a move back up to the 124 level, which is the 200-day moving average, and more resistance up around the 127.50 level is really going to be your best short, which would coincide with some really good resistance for almost a month's worth of work throughout the month of April as well. So 127.50 area, really good resistance on the daily charts around the 50-day moving average, and also where there was a tight consolidation pattern from where it broke down from. But overall, long-term bond trend still intact, with the daily trend, the shorter trend, definitely under pressure. What we like to see is daily and weekly and monthly trends all line up. Obviously, the sequence is the shorter term time frame starts to move, and then you move into the others. When you do get the daily and the weekly time frames in alignment, it's often a very powerful move. So that's it on the TLTs. Now, let's take a look at some of the other market internals. As you can see on the McClellan oscillator, we did get a bit oversold, and we did get a bounce. But what's interesting is the market internals here are lagging. Advanced decline as the market has made new highs, quite a bit lower than it was just a couple of weeks ago, from where it had that moderate sell-off from. Now, interestingly enough, up-down volume was never enough on a shorter term basis to generate or trigger a buy signal. It's sort of in the middle, so there isn't really much volume coming in to the markets. And again, as I mentioned, advanced declines on a shorter term basis has room for move to the upside or downside. But again, a moderately positive signal from that recent sell-off back in early May. So market internals, I would say slightly negative overall, where the advanced decline and the breadth has really not been able to materialize into very much, not convincing volume to the upside as well. That's another negative. And again, the sentiment readings are negative. So that gives me a slight balance to the negative, looking at those two factors. Of course, on momentum, clearly sideways action, but the trend overall intact in the spiders and the key indices. So the key thing for this week to watch is silver and gold and commodities. If we take a look at the weekly chart in silver, we can see a couple things. There's this pretty well-defined downside channel, along with a break of the downtrend and the 20-week moving average, right? This cyan line is the 20-week moving average. Obviously, we're trading in this sideways channel. Now, what's interesting is that we're hitting levels that we saw back in 2010. So we had this huge up move, traded up to the historic highs going back to 1980 at $50 an ounce or close to it, all the way back down to that 15 level, even a little bit lower. And now it's starting to bottom out. And again, this is on a weekly chart. Silver is extremely powerful. Some other good piece of information here is JP Morgan Chase has been accumulating huge hoards of silver recently. So they're sitting on physical silver and accumulating lots of it. So silver at these levels moving into strong hands. The movement in silver in the last couple days with huge gap ups and very, very little sell-offs is also interesting to note. Let's take a look at gold as well. Similar type action in gold. Let me clean this up. And again, similar type action. Gold has now taken out its 20-week moving average. Would like to have seen it on a little bit better volume on a weekly basis, but it is moving up. And again, sideways action. We've moved off of the highs, which hit about 185, 190, all the way down to the 110 level, and sideways action and bottoming out as well. Now, in addition, let's take a look at some other things in the commodity world. GDX, which is a combination of gold miners, some industrial production involved in there too. And on a weekly basis, you can see that we've been down to levels not seen since the financial crisis in 2009. And for the first time, we're moving above its 20-week moving average on a ratio basis. I'd really like to see this take out the resistance level on this ratio, just a little bit higher from here. But look at this basing action, and if we can get above this trend line and this resistance line at around the 1.1 105 level, that would be pretty bullish action. And again, here's the action on GDX. You can see sideways. We really do need to take out the 22, 25 level. That would really confirm a move back up in the gold miners. And again, the gold miners have been under pressure for quite some time. In fact, gold miners are trading up, as you can see, around 55. It's had well over a 50 or 60% drop since those highs back in October of 2012. So tremendous move to the downside, basing action, and initial breakout here on a ratio basis. So this is pretty positive for gold miners, another way to play the market. But again, I want to go back to silver because silver is potentially the most explosive. When it gets going, it really moves. So again, let's make sure that we keep track of the silver market. We really want to see it hold above the lows of the week of last week. And again, one big difference that I do also want to point out, volume, pretty damn good on a weekly basis for silver. Not massive, but pretty good. And if we go to, let's take a look at the daily chart here on silver. And you can see interesting gapping action, not quite overbought yet, which is interesting on our short-term RSI, but clearly really good action. We blew through two levels of resistance. The 10-day moving average last week, as well as the 50. We had closed one day under the 50, closed back over it, gap straight up. That's pretty powerful. When you move from a bearish phase to a accumulation phase, all within 2 or 3 days, and a couple of gaps, that definitely bears taking notice. At this point, I would be looking to buy potential weakness or potential strength in this market as well. Place your stops appropriately. And again, this definitely looks like sideways action and potentially a reversal of a long-term downtrend in precious metals. Now, not to be left out of the game, DBA, which is agricultural commodities, not nearly as strong, but take a look at this. Interesting basing action. If you look at DBA on a weekly basis, you can see also breaking out of a long-term sideways pattern. And look at this, going back all the way to 2009. This is the absolute lows for years that it's now bouncing off of. So it's very possible with silver, gold, and commodities breaking out. This is a change, a sea change in trend for commodity prices. And whenever there's a sea change in trend in commodity prices, I'd be also extra cautious about the equities market as well. Now, let's look at one last thing, water, PHO. Really good volume in water and a nice breakout from its weekly chart. So this is very interesting. The 65 weekly is this blue line. You can see we're above the 200 weekly. So the overall trend now is in a bullish phase on a weekly basis, plus a breakout this week above that trend. Let's watch this. Again, interesting commodity to watch. And nice sideways basing action. So this could, even though it's a relatively low volatility type of trade, could materialize into something else. So again, silver, gold, agricultural commodities, water, all showing signs of strength in the face of a market that equities market, at least here in the U.S., that is having trouble moving higher, and with sentiment issues across the board. All right, that's it for now. Hope this helps. See you next week, and bye for now.